What is going on, guys? Today we're going to be talking about how Canadians are dealing with the current economic pressures. Okay, so spending has definitely slowed down. What does this mean for mortgages? What does this mean for the real estate market in Canada? Let's get into it. So, what's the situation? What are we really dealing with right now? So, as you probably know, the post-pandemic world really brought like a big surge of spending. Okay, so obviously interest rates were lower, people were at home, and once things started to loosen up, people were really eager to get out, spend money, enjoy life again. Okay, but now the reality of higher interest rates and persistent inflation is starting to really hit home. Okay, so Canadians are beginning to pull back on spending in big time. This is something that we see clearly in the latest RBC consumer spending tracker. And I can even post a link to it below for you guys to take a look at. So the Bank of Canada's data also tells a similar story. So household credit, which is essentially the amount of money Canadians are borrowing, grew by just 3.4% in May. Now this might sound like a lot, but it's actually a sign that things are starting to slow down. The growth rate is now only about 0.2 points above what we saw back in October, which was the lowest rate in over 30 years. This slowdown suggests that the peak of borrowing for the year might already be behind us. And if we take a look at the retail sales area, they have also taken a hit. So in the second quarter of 2024, we saw retail sales decline for 6 out of 7 months. Okay, that's a pretty significant trend. And what's driving this decline of spending? Well, a few things actually. We have rising debt service costs, which are a big factor. As interest rates go up, it costs more and more to service debt, meaning people have less money to spend on other things. And then there's the return of student loan payments, right? So for many Canadians, this is another financial burden that's cutting into their disposable income. And while we've seen some relief in areas like gasoline prices, overall cost of living is still very much high. And as a result, people are spending less and less on discretionary items like dining out or buying non-essential stuff. And so, of course, when that happens, the economy starts to slow down. When discretionary spending and spending in general slows down, that will slow down the economy. Now, who's really feeling this the most? Okay, it's clear that low-income households are really feeling the impact the hardest out of any group in Canada. It's obviously the lowest income that are going to struggle the worst. And many of these households are having to turn to their savings or even take out loans and rely on credit just to cover everyday expenses. And this is a tough situation because it creates a cycle where people are struggling to maintain their previous spending levels, which only adds more stress to their financial situation. It's kind of like, they're having to take out additional loans to pay back their original loans, right? And those new loans are typically higher interest, predatory companies that know people are in these situations, so they'll lend them money at very high interest rates. And now, what can we expect looking forward? What is on the horizon? So now, while things are getting tough, and they're tough right now, there is some cautious optimism for the future. So if interest rates start to come down later this year and into next year, we could see some relief for consumers, okay? Some relief. Lower interest rates could help ease the burden of debt and might even boost spending again. But for now, it looks like Canadians are going to continue being very, very cautious with their money. They're going to hold back. They're not going to spend as much. And Carrie Freestone, who's the author of the RBC report, summed it up really well. This is what she said, okay? She said, consumer spending continues to show signs of stress as many wait for the impact of the Bank of Canada rate cuts to filter through mortgage interest costs. So even though the Bank of Canada is on a path to lower rates, it's going to take some time before mortgage holders really start to feel the effects of these mortgage rate cuts. So let's take a look at how all this is affecting just home-related spending. If you're one of the many Canadians who's renewing a fixed rate mortgage in 2024, you're likely facing a significantly higher rate than when you first locked in your mortgage. This increase is definitely going to cut into your broader purchasing power, okay? Things that you spend money on. Once you renew, it's going to make it a bit harder to keep up with the same level of spending that you're used to. However, there's a bit of a silver lining, okay? So as the Bank of Canada continues to cut rates, we can expect mortgage holders to feel some relief when they renew, okay, especially if bond yields keep dropping, as we've been seeing over the past couple weeks. This could help actually restore at least some of the purchasing power that's been lost due to these higher rates that we see. So obviously I'll keep you guys up to date on all that information. Now let's look at a few other updates in the market. So BC actually revised personal use notice period. So in response to industry feedback, the BC government has actually made some changes to the Residential Tenancy Act. The personal use notice period has been reduced from 4 months to 3 months, and the dispute period has been reverted back to 21 days. And these changes aim to address concerns about the impact of extended notice periods on insured mortgage approvals and commitments. And I believe Steve Saretsky touched on this in his most recent video, so I recommend you guys go watch that for a good in-depth analysis on that specific topic. We're also starting to see mortgage arrears on the rise. So Canadian national mortgage arrears have edged up slightly in May, according to the Canadian Bankers Association. While the rate was small, from 0.18% in April to 0.19% in May, it's still a sign that some Canadians are struggling to keep up with their mortgage payments. However, it's worth noting that the national average arrears is, again, still significantly below that peak that we saw in the pandemic in June of 2020. And also it's below the average. So what does all of this mean for you, especially the consumer spending front? Okay, so the key takeaway here is that Canadians are really feeling the financial squeeze right now. They're cutting back on spending. And it's having a noticeable impact on the broader economy. So if you're a homeowner or someone looking to enter the market, it's important to obviously stay informed and consider how these economic trends, how these spending trends might affect your financial situation. And if you want to know my opinion on where we're at right now, because spending is being cut back so much right now, I personally believe that we are in kind of the recession already, or maybe we've been in it for a while, but now I feel like we're truly in it, because you talk to anyone and people are feeling it. You know, if you're boots down on the ground talking to just normal people, people are spending less. Things are so expensive for people. People are not happy. It's very tough to find jobs right now. People have been applying, you can find countless threads online of people applying to thousands of jobs through LinkedIn, online job posting websites, and people can't find jobs. And these are new graduates. These are people with 5-10 years of experience. Like, people cannot find work right now. And this is not good. At the same time, you're seeing companies laying off people. So all of this is happening while consumer spending is dropping. This is like a pure recipe for a recession, okay? And although we haven't had the technical definition of a recession, because you're supposed to see 2 consecutive quarters of negative GDP growth, and we just escaped that because GDP actually was flat. It was like 0.0, so there was no negative cut, let's say, in GDP. I think we are now definitely in recession territory, right? And I think now you're going to see the numbers change, in my opinion, when these GDP numbers get reported. If they're not negative GDP now moving forward, it's going to be it'll surprise me for sure. If the GDP numbers do not come back negative over the next few quarters, it's going to shock me, and it's going to have it, and then it's definitely going to shock me and make me wonder, how are we not in a technical definition of a recession yet? What is holding us back from actually being in a recession technically, right? And there'll probably be reasons for that. But if I had to place a bet on it, or if I had to make a guess as to what will happen, I think we'll definitely see negative GDP numbers over the next 2 quarters, because as we saw, the banks are now forecasting major rate cuts. TD CIBC, like in my previous video, they're predicting 2% worth of cuts till the end of next year, okay? Pretty significant drop, right? And it could be more than that, right? This is just a forecast, and this changes over time. So they're predicting over the next few quarters and into the beginning of 2025, the economy is really going to slow down. The banks and the Bank of Canada is going to have to make these cuts to stimulate the economy. It just makes you wonder, are we heading for that technical definition of a recession now, with consumer spending dropping, with all the other things in the economy shaping up, the way the Bank of Canada is talking about things? In my opinion, I see the recession is here. We are in it right now. And if we're not in it, it's going to come very, very soon, right? We have to see those numbers come out. We have to see the developments and the reports come out, and I'll keep you guys up to date on all that information. And of course, if you guys want to keep up to date on Canadian real estate, mortgages, and just the overall economy in Canada, make sure you guys subscribe and of course like the video. If you guys like the video, it really helps me push these videos to a new audience who might really benefit from the information. And of course, if you guys want to work with me directly, I will leave all my contact information down below. And of course, I will see you guys in the next video. Take care.